Hello and welcome to Portfolio Matters Share Talk. In today's episode, we will be updating on Sylvania Platinum, which we covered previously. But before we get into it, Richard will read the disclaimer.
Thank you, Keith. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end. Take it away, Keith.
Thank you, Richard. Okay, Sylvania Platinum, we did a share talk on previously, but I sold my shares earlier in the year because I thought that rhodium prices had just gone too far. And that has actually been a decent trade. So now that the share price of Sylvania Platinum has come back down, I'm taking another look. But we're not going to go through the minutiae of the company because we've already covered it. So if you are interested in the operations of Sylvania Platinum, which recovers platinum group metals from chrome tailings provided by third parties, then please watch our earlier share talk on the company. In this share talk, we're really going to be focusing on the outlook for the rhodium price and Sylvania Platinum as a result. So the share price is currently actually about £1. It's recovered in the last couple of days. Market cap about 280 million. It is throwing off a lot of cash currently because of very high rhodium prices, and it has just announced its half-year results, and they have been incredibly good. And it is announced a final dividend in addition to a special dividend it announced in February, and the yield that gives it dividends so far in the year of 7.75p. So very high yielding based on historic earnings. But the question is, what are the earnings going to be like going forward now that the rhodium price has effectively halved from its peak? Okay, and we are going to conclude that based on platinum group metals as they stand now, the shares are decent value, but not a bargain. So we calculate it's on a forward PE ratio of about 6.3. And that PE ratio assumes that the cash in the company is paid out as dividends and that therefore South African withholding tax of between 6 and 8% is paid on those cash flows. But everything really depends on the rhodium price, and rhodium has come down very substantially from its peak on the back of the restart of the Amplatz ACP disruption, and the ACP is now back in operation and working through a backlog of semi-processed material. So in the short term, there's actually additional supply of rhodium has come onto the market. At the same time, the global shortage of computer chips has forced car manufacturers such as Toyota to substantially cut back their car production. So Toyota have cut car production by 40%. Now, various analysts are forecasting that car producer disruption will bottom in Q4, and you can then expect demand for rhodium to start picking up again. And Johnson Matthey are forecasting that the rhodium market will remain in deficit for the foreseeable future. Now, that is all very bullish for the rhodium price. And so I am strategically positive on Sylvania Platinum, but the question is when to tactically get it back into the shares. And over the next month, I'll be looking to essentially buy on dip. as September is generally a bad month for the market. The S&P 500 has had an absolutely extraordinary run and is due a pullback, and also the car manufacturer disruptions will depress demand for rhodium in the coming months. So this is the share price of Sylvania Platinum, and it's come off substantially from the peak. It's now at around £1, but it peaked at 140 earlier in the year. And we talked about it in February, and I bought some, and then I sold it as I thought rhodium prices have peaked. And I'm now looking to get back in. Okay, let's talk about the fundamental driver of rhodium prices, which is global emission standards. And I want to thank our Discord viewer, Richard Wilk, for sending me various stuff on global emission standards, in particular, the Johnson Matthey outlook for PGMs. Okay, so this is global emission standards by country for light duty vehicles. And we are currently in Europe in the implementation of Euro 6D. And in China, in 6A, India have started to implement BS6, which is based on European standards. But what this chart shows is that emission standards are relentlessly tightening, and rhodium is by far the most effective catalyst for the removal of NOx, nitrous oxides, from combustion engine emissions. This is heavy duty vehicles. And in 21-22, we are seeing the implementation of China 6A and B. And the difference between the old standards and the new standards is really quite stark. So here we have the Chinese diesel emission standards, and you'll see China 5, you had NOx emissions of 2,800 grams per kilowatt hour was the minimum standard. If we go to China 6, you're talking about 460 to 600 milligrams per kilowatt hour. So you've had a 75% drop, sorry, an 80 to 85% drop in permitted emissions, and that is very bullish for rhodium. And light duty vehicles in China are also seeing big drops in permitted NOx emissions. In the EU, actually Euro 6 has been in place since 2014. What has changed is that the regulator has discovered that the car companies were gaming the system by using this cheat software. And so what they have done is they've added real driving environment standards. And so you see in the bottom here, you now have to get within 1.43 times the minimum standard in real driving environment tests. And that will continue to tighten over the coming years. So the EU's Joint Research Centre is proposing a conformity factor of being reduced to 1.23 and eventually to 1. And all that means that catalyst loadings per car are going to have to increase. And you'll see here that from the 1st of January 2021, NOx standards of the conformity factor of 1.43 came in, and in 2022, all new vehicle types are going to have to conform to that new standard. India are also implementing emission standards based on the European standards, and you'll see how much they've tightened. So in 1996, you're talking about 14,400 milligrams per kilowatt hour, and it's now going to be 0.4. So that is an absolutely enormous increase. So car makers around the world, including in developing countries, are going to have to use a lot of PGMs in their exhaust to remove NOx emissions. So in 2020, the global average rhodium content per vehicle was 45% higher than 2016. And as emission standards tighten, that is going to have to continue to rise. However, the very high rhodium standards, rhodium prices, that we have seen in 2021 has encouraged thrifting. And so Johnson Matthey are forecasting that the rhodium content of new cars in China will actually fall by about 10% in 2021. Okay, now one other thing that has been responsible for the extraordinary spike in the price of rhodium in 2021 was the outage at the Amplatz, which is part of Anglo American, their ACP plant, Anglo Converter plant. So they had an explosion at the phase A unit, and then they tried to start up the phase B unit and found there was water close to the furnace and a risk of explosion. They had to close that as well. And then they closed it again in November. So you had a resumption of global car production as the world recovered from COVID, at the same time as this ACP outage was reducing production. Now, the ACP plant is back in operation, and it is now working through a backlog of semi-processed material. And so you will see increased supply in both 21 and 2022. But it just goes to show you how concentrated the global supply chain in rhodium is, and how the outage at a single plant can disrupt the global market. Okay, so moving on to the rhodium price, and you can see the rhodium price actually has fallen further from here. It's about 15,800 currently, but it's come down a lot from its peak. And if we look at catalyst demand for rhodium, you'll see that in China, Johnson Matthey are actually forecasting it to come down slightly, whereas previous years it has been rising. And presumably it will start rising again when car production gets back to normal, and there's only so much thrifting you can do unless you can find a technological solution for substituting platinum. Okay, so this is a table of supply and demand from Johnson Matthey. And so you'll see in 2020, there was a big dip in production. And now, as they work through the backlog, you're going to see raised supply in 2021. And auto catalyst demand continues to rise. But at the bottom, the rhodium market has been in deficit, and they're forecasting it to remain in deficit. Now, it can't stay in deficit forever. If it is the only solution to NOx emission standards compliance, then the rhodium price, you have inelastic demand essentially, and the price could well spike again. But before we move on, my fundamental question is, where is the true value of the rhodium price? Because you have had this extraordinary spike based on supply chain disruption, and we don't know where it's going to settle. And it is tempting to believe it's going to come back up, but we just don't know. If you look at where the price was, 2 years ago, it was below 5,000. So summary, great deal of uncertainty over the future direction of the rhodium price. Now, this is palladium, which has also had a very good run since 2018, but nowhere near to the extent of rhodium. And it has not come off anywhere near as much in the last few months. Now, again, Johnson Matthey are forecasting a supply deficit in rhodium, and they're saying that the market has been in deficit for a good few years now, which is suspicious. That suggests that they're not actually properly accounting for all sources of supply. And if we look at autocatalysts for demand for palladium, then you're seeing rising demand in 2021 after the disruptions of 2020. Again, it would appear that thrifting is occurring in China this year. So because of the requirement to meet Euro 6D standards, palladium loadings per vehicle are still rising. And if we look at the supply-demand table, you'll see again there is additional supply this year because of the Amplatz ACP, and the market is in deficit. It can't remain in deficit permanently, but also there is investment demand which has been negative. So people bought palladium a few years ago in a speculation, and as the price has risen, they've started unloading that, and there's only so much investment sales that can go on before investment falls to zero. So that is also bullish long term. Now, platinum, on the other hand, has not performed anywhere near as well. So its price has only come up about 20% since 2019 and has also come off recently. And Johnson Matthey are forecasting that platinum will remain in surplus in 2021, although demand in China has been rising rapidly. So here you'll see that the movement in stocks in palladium is positive. So Johnson Matthey are forecasting a supply surplus. Notice also that investment demand has been strongly positive over the last few years. So speculators are building up stocks, which, if the price were to fall, could come back onto the market, causing further falls. Okay, so moving on to Sylvania Platinum itself, we have just had the results for full year 2021. Throughput rose by 17%, which is great. Platinum Group production was 70,000 ounces, and they're forecasting that that will remain the same in the coming year, in 2022. And so you'll see there's only a very small increase of 1% on 2020. So essentially you had more throughput, but falling grades. And there were also higher costs, mainly due to higher electricity prices. And they announced an annual dividend of 4p on top of a 3.75p special dividend back in February. And they also discussed the possibility of a further special dividend in early next year, all of which is very positive. So we've had enormous revenue growth and profit growth on the back of rising PGM prices. Now, if we go back to the interims 6 months ago, this was the forecast production profile. And you'll see in 2022, they were forecasting that production would fall. And now, if we move on, this is the revised production profile. And you'll see that actually now they're forecasting no production fall in 2022, which is obviously very good news. But after the end of the year, which is June 30th, they have had disruption at Lesedi. And so if you look at the size of the yellow bar here and move, you'll see that Lesedi production, they're forecasting, will be lower. And they've had problems with the tailings dam at Lesedi due to it being undermined by water from an aquifer. Now, what seems to be happening is that they have sourced third-party ore. And so that will add another 2,000 to 3,000 ounces of PGM production going forward. And that is excellent. And they are also have commissioned their various projects which will maintain production going forward. So the Lesedi secondary milling and flotation project is going well, and that'll be in production from second half 2022. And Tweefontein has been commissioned, and that is going to be online in the first half of 2023. Now, the other thing they're doing is they are implementing a project for fine chrome recovery. So very fine chrome particles they can't currently recover. And that's interesting because that means they can actually go back through materials that has been dumped on the tailings dams. Okay, I'm not going to go through the full presentation because the presentation is available online for anyone who is interested. But the bottom line is that production going forwards is going to be stable, and what's really going to drive the profitability of Sylvania Platinum is the outlook for the rhodium price. So just going through the F1 highlights. Revenues were up 79%, EBITDA was up 108%, net profit was up 143%, and basic EPS was up 151%. They also had cash of 106 million plus 59 million in working capital, which means that they can fund a further special dividend if they so choose. Now, let's do a calculation of where we think 2022 earnings could be. So let's assume that the PRIL split from 2021 was unchanged. So it's mainly rhodium and only about 0.3% gold. And there's a mining royalty tax of 7%, corporation tax of 28%. But also, one thing you should be aware of is that there is a South African withholding tax on dividends, and all the dividends paid by Sylvania Platinum are paid out by the Bermudan entity. So there's a further 6 to 8% essentially paid on cash paid out by the company in the form of dividends. Actually, I need to update that. We are now using the figure of 70,000, not 65,000, which was the number from the interims. Now, one thing that we didn't fully get to grips with in our original presentation is the smelting charge. So Sylvania don't sell the finished metal. What they do is they sell the concentrate to a smelter, and they book profits when the concentrate is given to a smelter, but then 4 months later, when the smelter sells the final metal, there is an adjustment between the price that Sylvania booked originally for the metal and the price actually obtained in the market. In addition, the smelter takes around 25% of the metal as a charge for its services. Now, nowhere have I actually found that figure written down. And so we are going to assume the smelter charge is 25%. But that is a figure that I've interpolated from the various annual reports and from commentary online. Based on the PRIL split, so it's mainly platinum, but the vast majority of the revenue is from rhodium. So the PRIL split is 63.3% platinum, and we're assuming price of 1,000. It's 12.7% rhodium, and we're assuming price of 15,000. And it's 23.7% palladium, and we're assuming 2,400. And then we are applying the operating costs that Liburnum are using in their latest piece of research, which is actually substantially higher than the operating costs I had originally assumed and which were reported last year. And using those figures, we get to forecast PE ratio of around 5.8. But if you were to pay all the cash out, all those earnings out to shareholders, you then pay the withholding tax and that PE ratio would rise to 6.3. In conclusion, the bull case for Sylvania Platinum, given that it's got stable production going forward, it's not really growing substantially in the coming years, depends on the outlook for PGM prices, in particular rhodium, which makes up over 50% of revenues. And as we have seen, emissions standards are tightening. There's a structural deficit in the market, but currently supply is above average because of the ACP working through a backlog of semi-processed material, and also because car producers have cut back production due to supply chain problems with microchips. So where is the true price? We just don't know. In the last 2 years, the price range has been between 5,000 in 2019 and 30,000 in 2021. In addition, there are a lot of tax deductions. So you've got income tax of 28%, mineral tax of 7%, etc. There's a big difference between the gross earnings and the earnings available to shareholders in Sylvania Platinum. But bottom line is, I like it, and I will be tactically looking to get back in on weakness. Richard, your thoughts?
Yeah, thank you very much, Keith. I thought it was really, really interesting analysis of the PGM market, actually. Thank you for that. And it's obviously very relevant to Sylvania. It's very different. So I bought Sylvania around about the same time you did, and I didn't sell. So I still hold them. So I'm currently about break even on my holding, which is like one of those frustrating things, isn't it? But I think we're currently in a state of flux with the vehicle market. We've got this supply chain problems relating to chips. We've got the switch over to electric vehicles, which nobody really knows what the pace of that will be, because it's going to depend on the electricity infrastructure, I think, fundamentally, and that's quite imponderable. And it's quite easy to get. I think it's quite easy to either exaggerate the prospects for rhodium, or to get very despondent about the prospects for rhodium. And I think those charts from JPM showing and the charts showing supply deficits or surplus in the case of platinum are also very interesting. So it's more of I think it's more, given all of the analysis that you've done, it's not a bad investment. I will continue to hold my shares, and it's giving a decent dividend yield. And if you think the PGM market is going to be either stable at this level, or as you say, particularly the price of rhodium is going to start creeping back up, then there's some upside in it. And I think that, to my mind, that means I will continue to hold it. But it doesn't look like it's going to be a 10-bagger, does it?
No, it doesn't. But it's throwing off a lot of cash. It has done over the last year. And if rhodium were to go back up, then it will once again throw off a lot of cash. The real my fundamental problem, though, is that the price of rhodium has been so volatile. There has to be a great deal of uncertainty as to where it will go in the future, because that spike was absolutely extraordinary. And the trouble is, it's very tempting to anchor onto that spike of 30,000 and think that it's going to head back up there. But actually, we just don't know where fair value is.
Exactly. And the other problem we have is we may know that there's a projected supply deficit, but we don't know what the stocks are. So therefore, we don't know how long it'll take for that supply deficit, if it were to continue, to bite hard. I was also intrigued by the fact that they might start trying to do some additional chromium recovery.
Yeah.
Which puts them, I don't know how much, what the timing of any additional revenue might be there. But that's an interesting prospect. It does strike me as being a well-run company.
Yes. There is online a results presentation, and management come across very well, actually, I thought.
Yeah.
So essentially, it all depends on where you think PGM prices are going to go, essentially. Yeah. And we've had this incredible spike, and the bull case depends on that spike recurring. But if it doesn't recur, you get a company with, we estimate, a P ratio about 5.8 and a decent dividend yield. So I'd say this is fairly low risk, as long as rhodium prices don't collapse, and the tightening of emission standards should ensure they can't go down too far.
I think that's right, Keith. And I think the threat from electric vehicles is probably too far out to be able to factor it in.
Yes, I agree with that. And that is an assumption.
Yeah.
Okay, thank you all for watching, and to Richard Wilk for sending me loads of stuff on emission standards. And please can you press like and subscribe to the channel. And in the meantime, it's goodbye from Richard Wheater.
And it's goodbye from Keith Jordan.
Goodbye.
Goodbye. Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only, and should not be relied upon for making a business, legal, or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website, or to any information, products, services, or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information, nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.